Hey guys, the Silver Surfer 2012 here, Joe Cap. Just wanted to make a quick video for you. I know it's been a while since I put one out. I've been incredibly busy and kind of hoping that people start checking things out on their own as well. If there are people out there relying on me for information, I apologize for not putting out videos as consistently as I wish I could. I just wanted to bring you a quick video on the debt ceiling debate, debacle rather, that's been going on over the course of the last 2-3 weeks and has officially came to a head yesterday, Sunday, July 31st. Apparently they have reached some type of deal. Um, the deal will include them raising the debt ceiling, as I knew they would be doing, um, based on the sources that I get my information from. Mainly Infowars.com, InternationalForecaster.com, Bob Chapman, SGT Report on YouTube, as well as Bull and Bear Report on YouTube, and also Endless Mountain. So if you have some time, I would definitely recommend checking out these guys so that you are in the loop, so to speak. But anyway, this so-called debt deal is going to include $1 trillion cut over the next 10 years. No cuts will actually go into effect until 2013, by the time all of these current politicians, or a lot of them, are removed from office anyway. So they are not going to actually have to deal with any type of spending cuts. It's going to be the next group of politicians that are in. But either way, we are going to get this debt ceiling increased, and it is going to mean more monetary printing. There's also big talks of quantitative easing 3 coming from the Federal Reserve. Although, a couple weeks ago, a month ago or so, they said there's absolutely no chance that they're going to be doing quantitative easing 3. But now that has all come to pass, and it is apparent that they're going to be doing quantitative easing 3 and raising the debt ceiling. So, what does that mean for gold and silver? Well, Bob Chapman with the International Forecaster is forecasting that it should double by February of 2012, February of next year. That's only 6 months away. Gold right now sitting at $1,600 and $1,625 roughly, and silver sitting at about 39 and change, almost 40. When the debt ceiling announcement first came out last night, on the 31st, Sunday evening, they reacted negatively to the news. The Asian markets, not a huge sell-off or anything like this. Gold was down about $18, which is a little bit more than average that it would be down, but based on the news, it's expected. And silver was down about 80 cents, which again is all relative to gold. I mean, they've been trading in anywhere from 39 to 42 to 1 ratio. So, silver, it would take 40 ounces of silver basically to buy 1 ounce of gold. That's been kind of the ongoing trading ratio for the last couple months. We actually did get down to a 32 to 1 ratio back in May, before silver had to go through a correction over time. However, I think we will move back to that, but since then we've gone back to about a 40 to 1. So anyway, Bob Chapman is saying that by February of 2011, my birthday, be a nice birthday present, right? Have gold double in price and have silver double in price as well. So if they were to both double in price, they would still be at the 40 to 1 ratio respectively. Just that gold would be about $3,200 an ounce, and silver would be about 80. Now, you might say to yourself that that's just ridiculous, and if you are saying that to yourself, it's because you're thinking in terms of measuring these things with US dollars, and we know that currencies are a very poor measuring stick when it comes to measuring assets. I personally think that what's going on is this system called the Federal Reserve, which was created in 1913, has been designed to basically print paper money, pass it out to the people, so that they can buy assets off of the people, and you know, they are kind of at the end of the game, so to speak, are the ones holding the assets while the people are the ones holding the paper, and the paper cannot buy nearly as much as it could have when it was first when the game began in 1913, so to speak. And if you study history and you study other inflationary situations such as Germany, the Weimar Republic, and Zimbabwe in 2008, also in Argentina, which was one of the richest nations in the world at one point up until just about a decade ago when they went through a severe hyperinflation. So, to say that it's impossible for the U.S. to go through something like this, I think I think we're just really being short-sighted with that, and I still stick to my guns with thinking that we need to get assets, hold physical assets, um, just because of the inflationary situation that we're going to be experiencing. There's a time and place for every market, and 10 years ago, 15 years ago, may not have been the time for precious metals, just based on the things that were going on in the economy. But as cycles go through their ups and downs, we are definitely in a precious metals cycle at this point, and for people not to think that that is the place to be at this point is a very big case of denial. So are we going to see 100% by February? I don't know, but I think definitely by next year this time we'll see 100%. I mean, silver's up 100% from last year at this time. Gold, not 100%, but gold was about $1,300 an ounce last August, and now it is almost $1,700. So we're up about $400 on gold. You know, you'll mostly hear in the mainstream media, guys, when they knock it down and they talk about, oh, silver took a hit this week, and but what they're not telling you is that it's still up 100%. Now, where could you have put your money in the last year to make 100%? I mean, really think about that. So, of course, they don't want you buying gold and silver in mainstream media. All their advertisers are all Wall Street related. Of course, they want you buying, stocks and mutual funds, and that's where they want you investing your money. But we need to start thinking more as individuals and less as a group. And we need to start thinking for ourselves instead of what the corporate mainstream media is telling us. If we can't decipher this information for ourselves, then we're going to be in a lot of trouble in an individual basis, which is why I made a decision about a year and a half ago to start looking a little bit more deeply into what's the root cause of the problems going on. As the economy was grinded to a halt and then was such a slow recovery, I started saying to myself, I'm working harder and harder to make less and less, and I didn't even understand the whole concept of inflation or monetary debasement or precious metals or any of this stuff. But I just took it upon myself to start researching and figuring out why this was the case. And since I've started doing that, the whole direction of my life has changed, and how I plan and have an outlook for the next 5 to 10 years of my life has changed for the better. Not only emotionally and the way that I feel about how I'm preparing for things and my retirement eventually, but also financially. So some people say, oh, Joe, you're focusing on the doom and gloom, this and that, things are going to recover, and I say no, I'm focusing on the reality, and the reality right now is what it is, and we need to focus on it and plan accordingly. Otherwise, we're just in denial and we're being ignorant. So it's all up to you guys how you want to approach it, but that's my personal approach. And after trying to deliver the message out to as many people as I can reach over the last year, hopefully some people have heard, seen the writing on the wall, so to speak, and we know that it's just going to continue now based on this debt ceiling increase. We spend $1.6 trillion a year more than we're supposed to, basically, than according to our budget, that our budget allows. So basically $1.6 trillion a year is borrowed into existence from the U.S. government in order just to pay our bills. That's roughly 40% of every dollar. So on the other side of it, if they did in fact cut all of the deficit spending. They did in fact reduce all the deficit spending. Imagine every dollar in your pocket instantaneously being able to only buy 60% of what it could right now, because it would be reduced by 40%. Imagine what that would do to all the commodities and just everyday living, everything you spend money on. So it is a hard decision at this point. Do we raise it or do we not raise it? But you know, the hard decisions should have been made a long time ago before we got to this point, and we're just kicking the can further and further down the road by raising it. Me personally, I'm a fan of, yes, it should have been raised, but the cuts should have been a lot more drastic, so that when we come to, you know, another 5 to 7 years from now, we can get to a point where maybe we can equal it out without causing catastrophic economic events to the individual American. So that didn't happen. $1 trillion over 10 years is not much, and I believe that they're going to be meeting again in November, Congress, to look at a possible another 1 point something trillion. But guys, I mean, we are still, you know, we were forecasted to spend 10 trillion, and now we're going to spend 8 trillion, or 7 trillion rather was the number, over the course of the next few years, in addition to, you know, what we could afford to spend. So I mean, it's just ridiculous. So guys, the monetary printing is still going to increase. The value of your dollar is going to continue to decline. I wish I had better news for you, but unfortunately, with the decisions that they're making in Washington, we don't have that news. So I still stand by what I've been standing by for the last year: buy gold, buy silver, hold on to it. You know, people say, "Oh, well, what are you going to do with gold and silver? You can't eat it." You know, if something should happen, you can't eat metals. Well, you can't eat dollars either. Okay, you can't eat paper either. And what happens is you buy these metals now, you hold on to them, and you trade them in later for more dollars than you bought them for, if you don't understand the concept of why you should buy them. So later on you trade them for more of the fiat dollars, whatever they are. If it's dollars, or they decide to have some kind of, in 20, 30 years from now, they do away with the dollar and they have some type of other currency, or maybe even trade them in for euros, or whatever is the world reserve and strong currency at that point in time. And because you held on to the metals, as opposed to holding on to dollars, you will have gained so much. Actually, you have you kind of will have stayed still while the currency that you traded in for the metals has depleted or gone down. But because there's going to be such a rush to these metals, you will also catch the wave on the way up, because there will be speculation and there will be a rush to metals to protect wealth. So not only are you protecting yourself, you also will be getting gains. Okay, guys, so if you have any questions, comment on the video below. I'd be happy to answer anything that I can in my best scope of knowledge. And that's it. Have a great day and take care.